Hey guys, welcome to the trade recap for AUDUSD from last night. If you guys were active in the Discord, you would have seen the entry, but we'll go through it now. So AUDUSD, this was kind of a riskier end trade for a couple of reasons. So I'll start with that first, and then I'll go with why I decided to take the trade. So first, starting off, we have our typical change of character, right? So we've learnt about this, we've talked about this. So we have bullish structure, a change of character because this candle closed below this low, right? Below this protected low. And then we had a revisit. We respected this supply zone here, and we could have respected this one as well. As you can see, price tried to. And then we had a continuation down, right? So as you can see, the trade was taken here, but we have this continuation down. So we are looking for sells, right? High time frame aligns perfect. Main thing that kind of, alluded to the fact this is a riskier trade is we had this 15-minute demand zone here as well. Also, DXY was bearish. So if you know, like we've talked about previously, if DXY is bearish, then our USD pairs are bullish, right? So because they're inversely correlated. As you can see at this around, where was it? It was around here. So we were bullish, expecting that continuation down. So that was a factor. I was expecting it to come down and fill this gap here, still am. But that was a factor that led me to kind of be hesitant towards the trade. But I took it anyway because I'm working on trusting my analysis, right? Now we got the don'ts out of the way. Let's do the do's. Oh, one more thing. We were out of the leg. So as you can see, we have price moved up like this. The internal change of character. And we had this huge extended leg, like there was no retracement back, right? So this means that price is getting more and more exhausted. So as you can see, the momentum is slowing down compared to, if I take these away, compared to these body candles here, you can see these candles are getting smaller and smaller and smaller, and these bullish candles are starting to form. So it means price is losing steam, right? We were out of the leg, or we were long in the leg. So if we took the short here, there'd be a lot more probability. As opposed to taking it here, we have higher chance of it reversing, right? Now, as to the why, again, higher time frame alignment, we have a change of character, expecting this continuation bearish, right? Now, we have our clear internal structure, right? Again, a riskier trade, but we have our internal structure. So internal break, internal break, internal break, right? Continuation down. I'm just having my price right at that supply zone, 3-minute supply zone, and I'm taking the trade just as price enters that zone. Either a market or a limit order is fine. As you can see, we grab the tops of each of these perfectly. That's because I'm not targeting up here. You can, but higher probability of getting hit is just as it touches the supply zone and getting that continuation down. So that's what I did. Just take this out. So marked out my 3-minute supply zone here. So, stop loss right above the supply zone and the entry right at the supply zone, right? So entered right as that is tapped in, stop loss up here, and I went to break even just after this break of structure here, right? Perfect. So price tapped in, continued down, and I took profits right at this supply zone, or this demand zone here created. Let me just get back to that. Created by this demand zone. So always keep a lookout for these demand zones because you don't know which ones will be respected. It could be this one, could be this one. Just be ready to take profit, right? That's a good thing I did because price just reversed. That is the basic trade analysis, but main thing I want you guys to take away is consider the pros and the cons, right? Don't just see a setup and take it. That's again where discretion is important. So just because the setup formed here doesn't mean I would take it, because chances are you get wicked out or like you price just completely reverses. You want to take price or you want to take trades up in the top half of the structure, right? So if we're in something like this, a bullish structure, right? I'm looking for longs. I'm not looking for longs here. I'm not looking for longs up here, right? Because this is a lower probability. I'm looking for longs down here because this is higher probability. Price can keep going down, right? So same thing with bearish structure as well. If we have price moving like this, I'm looking for shorts closer to the top here, right? Not so much here.